Good evening, everyone. So I'm Engineer Mustali Shahid, Chairman of IT and Computer Engineering Section Committee. So thank you for being here with us today. So on behalf of IT and Computer Engineering Section Committee, I am pleased to welcome all of you all today for our session on an overview of central bank digital currency and lesson learned from India. So without taking much of your time, I would like to introduce our speakers for the session today. Dr. Sapumal Ahangama. Dr. Sapumal Ahangama received his PhD in data science from the School of Computing, National University of Singapore, and he is a senior lecturer at the Department of Computer Science and Engineering, University of Moratuwa, Sri Lanka. He is also a member of the Center for Financial Engineering and Risk Management at the department. So, Engineer Chakshika Amaravardhana, Engineer Chakshika Amaravardhana received his BSc in Computer Science Engineering from the University of Moratuwa and holds an MBA from the Postgraduate Institute of Management, University of Sri Jayawardenepura. He is also a Vice President of the Alumni Association of University of Moratuwa. He possesses over 14 years of multidisciplinary experience in ICT project, fintech, e-commerce, techno-commercial projects, digital transformation, and digital customer experience. Thank you. So please drop your questions in the chat box and we will be answered as soon as possible at the end of the session. So once again, thank you very much and let's start our session. Dr. Sapumal, over to you.
Okay, thanks, Engineer Mustali, for the introduction. So we'll have the session with multiple parts. So Engineer Chakshika will be starting off, then I'll be joining in the middle.
Okay, sorry. So Engineer Chakshika, over to you.
Yeah. Engineer Mustali, can you please allow me to switch on the camera and allowing sharing screen?
Yes, hold on. Permission dunna ne yada. Chakshikata?
Yes.
Right, thank you, Chandra.
Hope everyone can see my screen. So good evening, all of you. I would like to thank ISL, IT and Computer Engineering Sectional Committee, the Chairman, Engineer Mustali, and the team for inviting us to deliver this, I would say, a timely speech where everybody, every financial experts and the powerful countries across the globe is interested about this topic these days. So Dr. Sapumal Ahangama also joining with me, who is a technical expert of the field. So I will start the session by introducing what is digital currency.
Engineer Chakshika?
Yes.
Yeah, Engineer Chakshika, can you put on your slides? Okay, full slide mode.
Sure.
Okay.
Then program for the day would be this just outline. So I will be introducing what is CBDC, and Dr. Sapumal will be explaining history of cryptocurrency, because this central bank digital currency has came into the picture as an evolution of cryptocurrency, because with the emergence of cryptocurrency, all financial authorities and countries thought, why don't we develop something by our own that is similar to cryptocurrencies by taking the positive facts of, by referring positive facts of cryptocurrency. So knowing the history and the evolution of cryptocurrency will lay a good foundation to proceed with this session. So Engineer Sapumal will explain that. And there are a couple of technologies behind CBDC, mainly blockchain technology. So Sapumal will explain the same. And then I will be explaining difference between CBDC and fiat currency and cryptocurrency. And we will be discussing the global status and how many countries by now into this CBDC, and the countries who have launched but cancelled or rollback CBDC. So, and then we'll be discussing advantages and disadvantages of CBDC. And then as a central bank of a country, so what would be the role of a regulator and the operationalization challenges and probably options. And then Dr. Sapumal will go through CBDC design choices, because there's no such, I would say, a standard that CBDC would be as such. So it is completely a decision of a particular country on to decide the way of operating CBDCs. So there are a couple of options that is commonly available. So Engineer Sakumal will touch that area as well. And then we will be discussing Indian launch as a case study and few other interesting global cases. And finally, we will be concluding the session with challenges and future of CBDC. Okay, then let's have an idea. What is CBDC? So that is the abbreviation for Central Bank Digital Currencies. So that is not something to do with Central Bank of Sri Lanka. You know, any country can have their monetary regulator. So commonly we call as a central bank of that particular country, or sometimes referred as a Federal Reserve. Or likewise, there's a central authority who controls the monetary policies of the country. So the currencies, in the digital form, the currencies, we would say those are actually issued in the nature of tokens, electronic tokens. So those are called CBDC. And I heard that some parties are little confused with the digital currencies that are presently used in our wallet, maybe in our e-banking. So the major difference is the digital currency is not that. So for example, I might have 100,000 rupee in one of my e-banking wallet, and that I receive, say, as a salary, my salary, and I am not touching any physical currency, not at all. Say I am making all my payments via digital payment cards, wallets, and I'm transferring money to others. So I'm not even touching just a single note or a physical note or a coin. But still, this is not digital currency, because the origination of these is fiat currency. So take that point into your note and keep that idea in your mind. So this is something, it is issued as a digital currency. Say, in very layman's term, think about a token with some serial number. So central bank will issue a set of digital currencies with a particular value. So that is which is issued as digital currency itself is called central bank digital currency. So that's the main difference between fiat currency and digital currency. So as I told you before, this central bank digital currency has evolved as an extension of, I would say not an extension, but by taking the positive facts of cryptocurrencies. So to enlighten you about the history and the evolution of cryptocurrencies, I would like to invite Dr. Sapumal. Dr. Sapumal, over to you.
Thanks, Engineer Sakshika. I'll share the screen. Right, I guess everyone can see the screen. So it's thanks again, like as Engineer Sakshika said, to invite me for this. So in this part, I'll briefly share how a cryptocurrency came into place and how that led to the beginning of CBDCs, the concepts that we know. So as you all know, like Bitcoin is founded by anonymous person. We don't know it's a person or group. It's usually known as Satoshi Nakamoto. So there were lots of conversations going on. So one thing he said was in one of these interesting financial conversations, we still don't know whether it's a person, whether it's a male, female, or whether it's even a group, and where his origins are, his or her. So what Satoshi said was like most of the financial systems in the world are centrally controlled. And as a result, these systems do tend to fail. So for example, if you recall in 2008, we had a global recession, and not that long ago, Sri Lanka had some issues with the financial system. And currently some people are saying that we are also heading to a recession right now in global terms. So the key reasons behind these recessions is that the centrally controlled nature of these systems, and because it's centrally controlled, sometimes some of the decisions made are not the best decision for the country. So if you take a Sri Lankan scenario like what happened last year, some people can argue that some of the decisions taken by the government, the central bank, and the decision-making authorities were not the best. So Satoshi said that I hope it's obvious it was only the centrally controlled nature of these systems that doomed them. So when it comes to the financial sector, especially around 2008, where the period where Bitcoin came into play, there were lots of financial issues with the financial sector. So one of the key issues was that there is repeated amount of financial recessions. There's instability, like large banks are failing, large financial institutions are failing. So the closest one to this event is the 2008 financial crisis. So in addition, there was like fiat currencies. There were lots of unsound policies followed by fiat currencies. So if anyone of the audience know what's in these images, like these small images, these are actually Kahawanu and Massa coins issued in Sri Lanka, like from the Anuradhapura period. So for example, Kahawanu, it's issued with the gold backing. So this coin is made in gold. Then if you take Massa, which is less value than Kahawanu, it's backed by bronze. So likewise, until very recent times, when it comes to currency issuance, most of the currencies were either backed by gold or some sort of a reserve. So those policies were removed. Like for example, US dollar had the gold standard. They were removed due to various reasons. Then in addition, there were like other issues like centralized intermediaries, which concentrate risks. For example, you had the Federal Reserve in US, the central bank in Sri Lanka, and in addition, like if you take a bank like Bank of Ceylon, they are like highly centralized and they have a lot of control on the economy. Another problem was legacy payment systems, like the SWIFT network that we are using right now for cross-border transactions. It's a legacy payment system based on modern technology standards. So for example, if by any chance I want to send US dollars from Bank of Ceylon to National Savings Bank, most of the time, US dollars has to go through an American bank. So although it's from Battaramulla to Malabe, or from Malabe to Battaramulla, it may have to go to New York. So that's because we are relying on legacy payment systems. In addition, there are like heavy costs. So if you are doing a wire transfer, you already know, like you might have a fee at a minimum of like $40, which like if you are transferring something like $100, it's a huge cost. In addition, there's another problem, it's financial inclusion. So although this might not be the case in Sri Lanka, but we still have that problem in Sri Lanka as well. Like in most of the countries, there are a set of people we call them unbankable, where they cannot access traditional financial systems. So for example, they cannot raise capital, they cannot raise funds. So they might have various issues, especially in South America. Then if you take countries like Indonesia, financial inclusion is a problem. So as a result, what happened was Satoshi proposed a peer-to-peer system where transactions and currency related work can be done without a trusted third party. So when it comes to currency issuance, we always relied on a trusted third party. There was a central bank, a Federal Reserve, or any other bank, like a trusted third party where we trusted on them, where when we do transactions, that third party will be doing the validation. So for example, if you are paying with a credit card, MasterCard or Visa is doing the validation. So in this scenario, what happened was proposing a peer-to-peer system where you don't need that trusted third party. So as a result, there were like many other digital currencies, just like engineer Chakshika said before Bitcoin. But Bitcoin was invented in 2008 by Satoshi Nakamoto. It was through a white paper known as Bitcoin, a peer-to-peer electronic cash system, which is available public, published under his name. And in 2009, we had the initial block being mined. So in 2009, the network was initiated, and it is live until today. It has a very high uptime. And the first implementation done by Satoshi, like the initial implementation done by Satoshi, it's called as the reference implementation. So that's like the core implementation of Bitcoin. But over time, lots of other developers, lots of other community joined in, and they have revived this solution a lot. So the initial launch in 2019 and the current present state of Bitcoin is completely different. That the core concepts are same, but it has come a very long way where the technology has advanced a lot. So that's a little bit of Bitcoin. So if you go to the popularity, Bitcoin has taken over the financial industry. Especially, we had several bull markets for Bitcoin, like where the price went very high. So, for example, earlier we had price went to 1,000. That was a milestone. Then we had price going around 20,000, and the current like the last bull market where we had prices almost 70,000. So key things happened all this time. Where one of the biggest things was that various institutions considered Bitcoin as an investment opportunity, or it was they considered it as another instrument where they can store value. So, for example, various organizations around the world, including Tesla, they invested large amounts of money into Bitcoin. And in not only governments, so organizations include even certain governments also went into accepting Bitcoin, like in some cases. So it has got very high traction and very high popularity. And as a result, if you take the current state, Bitcoin market cap is around $558 billion. And the total cryptocurrency market cap is 1,200 billion, or in other terms, $1.2 billion. So that's the net worth. So this is not the all-time high. We are all-time high we had much larger values, but currently the markets have gone down. And something very interesting is that the largest transaction that happened on Bitcoin, so this might have changed a bit because I took the data from a little bit older source, is around $1.1 billion. So imagine like $1.1 billion transaction going on a peer-to-peer network from one source to another without any trusted third party. And most interesting part is that this transaction was done at a transaction fee of $0.68. So it's just 68 cents. So that's the technology evolution that has taken place. So if I take the example of transferring $1,000 from Bank of Ceylon to NSB, I will have to pay nearly $40 or even $50 transaction fee. But $1.1 billion was very smoothly transferred over the network with a $0.68 transaction fee. So after Bitcoin came in, there were various other cryptocurrencies that came in. So in the interest of time, I will not be talking about that. So these currencies are like which support smart contracts. So the next most popular one is Ethereum. Then we have other currencies like Avalanche. Then we have other currencies like Solana. Then Ripple, likewise Litecoin, likewise many currencies. So something that was very interesting with the dawn of Bitcoin was with Ethereum coming into play and various other platforms like blockchain solutions which have support for smart contracts come into play is the dawn of stable coins. So stable coins is something where, let's say you have $1, you keep the US dollar with an organization as collateral, and they give you a token which exactly represents $1. So, for example, if you are familiar with cryptocurrencies, you might have heard the terms such as Tether. It's known as USD Tether. It's issued by an organization known as Tether, where you take $1 and they issue a token which is represented in dollars, and you can use to buy cryptocurrencies or even do certain transactions. So this is completely powered by a blockchain, and it's most of the time it's private organizations or foundations which is controlling them. So over time, with the popularity of Bitcoin, the Tether popularity also grew up. So Tether is not the only stable coin. There are various other stable coins issued by organizations such as Coinbase, related to Coinbase, and various other ones. So they were taking traction where like people were considering like if I want to transfer USD, why don't I buy Tether and do the transaction? So there was an exponential increase in Tether. So this was a big challenge to central banks. For example, if another organization takes the right to issue currency which is representing your currency, then you use your control. So that's one reason that led central banks to explore, because doing transactions with these stable coins was very much simple, and it was very fast, and there was like lots of user friendliness in doing those transactions. So that's one reason why the volumes also grew up. So I'll just briefly touch on the Bitcoin proposed solution, which is the core of any cryptocurrency or even most of the CBDCs. So most of the CBDCs are based on blockchain. So when it comes to Bitcoin, it had 4 key components. So I'll just explain this very shortly because of the time. Then I'll relate what's relevant to CBDCs. So for example, Bitcoin had a protocol. So it's the peer-to-peer decentralized network which defines how you validate the transaction. So when it comes to a CBDC, this protocol will be derived by the central bank, which is governing the currency. Then you have a blockchain, which is a public transaction ledger to store the transactions. So this will be like used in CBDCs to store the transactions if it's blockchain based. Then in addition, we have the consensus rules. So it's a set of rules for independent transaction validation and currency issuance. That means how you issue currency, it's governed by these consensus rules. So this is again, if it's come to a CBDC, it's again defined by the central bank. And then again, you have a consensus mechanism. So when it comes to Bitcoin, it's proof of work, but because of CBDC is a permission nature, you cannot have a public consensus protocol. So they have to derive their own protocol. So I'll just briefly touch blockchain. I'll not go into very much detail about blockchain because of the time as well as the focus. So when it comes to blockchain, usually it's a chain of blocks. What it happens is that you have an area where you can store the transaction. So I hope you can see the mouse screen. So whenever transaction happens, you store these transactions in the block data. In addition, you have a header. So header has certain amount of information. So for example, some hashes, timestamp, nonce, and the hash of this data. So what happens is like when you put some transaction into a block, when you create a block in the blockchain, you hash this data and put that hash in the header. So when you're creating a new block, that means like when you are creating new transactions, what you do is like you create a new block. So you put the new transactions in the block, and then you hash this data and put it in the header. In addition to hashing this data, you hash the previous header and put it into the next header as well. So the beauty behind this is like, let's say you want to change this transaction, but if you want to do any change in this transaction, then because the header of this block is dependent on this data. So if you want to change this any transaction here, and that will result in the change of this block header. So if you change this block header, you have to change this block header. And likewise, it goes on. So when the blockchain matures, when there is lots of blocks, the transactions become immutable, where it's not very easy to change anything. So that's why you go with CBDC. So that's like the core technology behind CBDC, so any cryptocurrency, which is based on blockchain. So for the remainder of the presentation, I'll hand it over to Engineer Chakshika, and in the later part, I will go further into the more technical part of CBDCs. Thanks.
Okay. So I'll continue with how CBDC are different from other payment methods. So I think now you have a good idea on the technologies behind CBDC. So this is a good representation of for you to understand I would say the scope or the nature of CBDC. So as you see on the top circle, so that circle represents the liability of the central bank. So the next circle represents the accessibility across the universe, or across the countries, I would say. So the third circle represents the electronic nature of the same. So if you see, you can understand that CBDC possesses the features of all three aspects. So that means it is controlled by a central bank, and it is a kind of in an electronic version, and it is universally accessible as well. And but here it is about fiat currency that we refer, that is cash, that is not in an electronic form but universally accessible, issued by a central bank. And this side, these are the reserves of central bank, that is in electronic nature. And another fact I want to let you know here is, I think if there are economic or financial experts here, they will definitely know. But for the benefit of others, I would like to mention that sometimes this currency issuance is misinterpreted as money printing due to, maybe due to political intentions or whatever. They always refer as money printing. But for your information, the currency in circulation is a very small amount of percentage from a currency that are in reserves from the central bank and from other banks. So this currency, the physical coins or physical notes that are in circulation, is a very limited amount. So the all other forms are presently either exist in a digital form, electronic form, or as in reserves. So the other part represent all digital wallets and cryptocurrencies. That means it is in an electronic form, digitally accessible, but it is beyond the control of a central bank, and it is, and these cryptocurrencies and other digital wallets are not a liability of the central bank. So this Venn diagrams clearly shows us where central bank digital currencies are positioned in. This shows the difference between digital currency and cryptocurrency. As Dr. Sapumal explained, digital currencies are centralized. That means those are issued by the financial regulator of a particular country, that is the central bank of a particular country. But cryptocurrency, we don't know the owners, so it is decentralized. There's no particular party who owns the cryptocurrencies. So the digital currencies, this requires verification, and cryptocurrencies, we would say it is partially anonymous, so sometimes it can be completely anonymous. But digital currencies, the central bank that issued those currencies have a good level of visibility where those currencies are transferred in, and I will discuss that in detail when I discuss about the advantages and disadvantages of CBDC. And this cryptocurrency is transparent, so that means we can see all the transactions, how those are happening. So that part is there, and this is regulated by central bank, and robust laws for transaction in all states. So digital, since those digital currencies are issued by the legal regulator, so we can transact using those digital currencies even cross-border. And this slide shows you what is about public money, private money, and as you see, cryptocurrencies, public money can be in different forms. One is, as I mentioned, currency in circulation. So that is in coins or notes. So, and as retail CBDC, that means which is being circulated among the public. And digital currencies can exist as bank reserves as well. And private money means the money that is, sorry for these overseas bank logos, but this is about the money reserves that is retained with banks. And e-money means, as you see, the money can exist in different wallets. So that is also considered that private money. And there's a set of money called quasi money that is on market base. So those are based on money market fund and shares, and as debt securities, and as Dr. Sakumal mentions, as stable coins. So that is another form of private money. So if I go to if I tell you about a couple of global key CBDC projects, as you see, including leading current countries like United States, China, Canada, US. So all have either tried. Also, as you will clearly see in this world map, some countries are cancelled, some countries are still doing research, and some countries are on POCs. These are the stats as of September 2020. Sometimes, sorry, I couldn't find a latest stat on this. And some currencies have launched a pilot version, and some are launched. And I have seen a fact that at the moment, around 114 countries has gone live with CBDC in some kind of a form, either as a pilot to as a POC. And those countries, those 114 countries represent 90% of the global GDP. So that means most of all the powerful countries have looked into CBDCs. So that's a kind of a plus point. And if you see, these are a couple of countries who has launched CBDCs, but later on they have cancelled CBDC due to various reasons. As you see, Denmark, they have cancelled the project due to risk attached to it, and in Ecuador, because citizens perceive CBDC as a government project to gain a monopoly. So in, for example, in Japan, lack of public interest. So due to various reasons, some of the countries have launched, but later on they have rolled back the CBDC project. And if I am to talk about advantages of CBDC, one of the key advantages is the real-time settlements. So, for example, presently, in the current context, if I am making a transaction to one bank to another, so the other party will receive the money instantly. The product like SEFT. So using the SEFT platform, we can transfer money to some other bank account in Sri Lanka. But the actual settlements happen as a day-end process. So it is not that my money that is in bank A goes real time to bank B. And similarly, cross-border payments, to settle a cross-border payment, it will take maybe T+1 or sometimes T+2 based on the technology they have used to make the cross-border payment. It will take 1 or more days. So here, by nature, those have designed as real-time transacting form of money. So that means whenever I do a transaction, and I think Dr. Sakumal will detail about a couple of implementation options. So there's a way that CBDC can be implemented without intervention of other public, so state or private banks. So that means, say I'm transferring some money to another person. So actually, that is a transfer of money between my central bank digital wallet to the other person's central bank digital wallet. There's no involvement of my bank, my public or state or private bank. So those settlements are happening real time in between those digital CBDC wallet that are maintained at CBSL under our names. So that is one of the key advantage of CBDC. And as you see, it will definitely reduce the cost of currency in circulation. So that's about physical money printing, physical coin production. So that will definitely reduce the cost of those transactions as well. And this will give more visibility to transactions. So on the other hand, in the next slide, I will discuss about the privacy issues. But if we take it as a positive note, the governments can have a lot of visibility to transaction. For example, say in the present context, so I get some money to my bank account in digital form as a fund transfer. But then say I am transferring that money to some other party, I'm making payments. So those transactions are not visible to a central authority. And say now the money I transferred is in person B's account. So if somebody analyzes person B's account, so it is like a money pool. So there's no way that it can be backtraced. This money, person B's money has been received from this particular 1,000 rupee has received from Chakshika. They can't trace it. But as you know, since these central bank digital currencies have a kind of a unique token, so they can even trace from its inception to the end. For example, say now that some say digital 1,000 rupees available in someone's wallet. Somebody has the access from the inception, how it has been came to that person's wallet. So using that fact, so there are a couple of controls that a government can make. For example, in our present lockdown period, if the government wants to restrict digital payments more than a mile in from someone's locations, they can disable accepting merchants from a digital wallet of a person who is living beyond 1 kilometer. Another example, say in relation to our fuel crisis, if government wants to control us making fuel payment more than say 10,000 per week, they can restrict that. So likewise, for example, another example I can say is a lot of frauds and criminal activities also can be governed. For example, say at the present context, if a criminal is caught by police and produced into the court, and there's a court order to seize all his bank account, but still there can be maybe physical money or the fiat money, physical money or coins or notes that can be hidden by him. So when the criminal is come out from the jail, still they can use it. So here, if a criminal is caught and if the government can identify that these are the digital currency wallet maintained by this particular criminal, so there's a capability to even cancel, we call it burn, all these digital currency assets may under his or her possession. So up to that level, the government will have a control. So those are the main advantages of central bank digital currency, and the transparency, as I told you. So for tax collection purposes, to calculate GDP, to decide monetary, the repo rates and other monetary indicators, so that visibility will be there. And if I'm to talk about disadvantages of CBDC, you will see that if you do your own research on central bank digital currency, there's a debate actually. There's a debate in the world that CBDC will completely impact your privacy. As I told you, as advantages, some people might see why government to know my each and every transaction. The transaction I made to my cake shop or restaurant or whatever, why someone else have the access. So the privacy here will be questioned. So there can be some government policies that we have the access, but we will not be using it for any other purposes. Or likewise, there can be rules and regulations or laws that can be imposed to secure the privacy, but still technically people know there will be a trace. So, and the cost. And if some country to go with CBDC, there should be a lot of IT infrastructure and software infrastructure to take place. So that will, and those systems should be extremely reliable and scalable and highly available. So to have that kind of digital infrastructure, so that platform can be very costly. And there can be challenges about inclusivity. So even nowadays, say aged person or who doesn't have access to a digital wallet or internet, so there can be challenges when someone has to use digital payment system or digital currencies. So likewise, if some country to go completely digital, so it will be a challenge for financial inclusivity. So there are tools that can be used to mitigate or reduce the impact for this inclusivity. For example, by having stored value card and allowing to do CBDC transaction using a mobile phone as mobile wallet. So using that kind of instruments, so we can address these inclusivity issues for some extent. And the other point is about a CBDC system can introduce a single point of failure to the financial system of the entire country. Because at the moment, there are no such central system to have an impact as such. But when central bank issues currencies in a digital form, and when it is completely in the possession of central bank, there can be a central point of failure. So those are the main disadvantages of CBDC. And then I would like to invite Dr. Sapumal to continue the rest.
Thanks, Chakshika, for that interaction, like about the advantages. So here I'll focus on what are the core concepts, like core technologies behind CBDC. So I'll be keeping it very minimal, and like I'll not going into much technical details. So when it comes to a CBDC, there's two types of CBDCs. One is known as wholesale CBDCs. The other one is retail. So it generally takes the same meaning, where like wholesale means like if you have financial institutions. So if you take the Sri Lankan scenario, central bank, the commercial bank, Bank of Ceylon, People's Bank. So these are like key financial players in the country. This will be a CBDC where they can interact. They can do the transaction. So for example, if there's interbank transfer is happening from commercial bank to Bank of Ceylon, or from People's Bank to Bank of Ceylon, or like from a reserve of central bank to Bank of Ceylon, this currency mechanism will be used. So it's generally known as wholesale CBDCs. Then the other part is retail CBDC. So this is the case where like individuals like you and me and small businesses, various organizations, other companies come into place where they'll be using this retail CBDC network to do their day-to-day transactions. So generally, when it comes to CBDC implementations, these are done a little bit separately. Actually, Chakshik also shared the retail CBDCs in his slide as well, because the technical challenges and the requirements on both these CBDCs are much different. So for example, if you take wholesale CBDCs, it's handling transactions of much larger size, but the volume of transactions will be less. For example, if it's a transaction settlement between two banks, Bank of Ceylon and People's Bank, it will be maybe several billions or several millions at least. But if it comes to retail CBDCs, the difference is that these will be the small transactions. Maybe you are going to pay at a supermarket, or maybe you are going to buy something from a grocery store, or you are going to pay someone for their service, like or even if you're like having an employee to work, like for a construction, like if you are paying the daily wage, you have to go with the retail CBDC. So here the transaction sizes might be small in terms of value, but the transaction volume will be much large. So when you take wholesale CBDCs, you will not have lots of transactions every second, but when it comes to retail CBDCs, it will be much higher, where you will have many thousand transactions per second in those networks. So you have two sets of challenges, and how are you going to implement it? So there are many ways you can implement these CBDCs. There's no fixed technology. So it's open for the central bank, or like the governing authority or Federal Reserve, to select which CBDC to select. So here are some suggestions that is around there. So for example, if you really require, you can use a currently available public blockchain, take a fork of it and implement it as your CBDC. So for example, Stellar Foundation, it's well known for their cryptocurrency involvement. They have an open source network. So if you really want to implement your CBDC, you can either go with such an organization, get their solution and implement. Then otherwise, if you want to go with Hyperledger, that's again a foundation, Hyperledger Foundation. You have again, it's available for everyone. You can implement that. Then again, if in a totally different direction, like if you want to go with the latest cloud tech, there might be solutions which are like supported by cloud vendors like AWS. So this technology decision it's up to you, up to the organization that's going to implement. So most of the time, when it comes to a central bank, let's say if you're talking about Reserve Bank of India or like Bank of China, usually they will assess these technologies, but they will generally make their own technology, because you are trying to roll out a currency network for your country. So they will be referring to these networks. So for example, if you take Stellar, they might have certain ups and downs. Then they might refer Hyperledger, they might refer what's proposed by AWS, and also they might look elsewhere as well. For example, if you take latest cryptocurrencies innovations, if you take Avalanche, they have subnets. Subnets is a case where like you can go to theoretically unlimited amount of transactions per second based on having subnets within the core network. So likewise, there's no fixed technology, but based on your core focus, whether you are going for a wholesale CBDC or whether you are going for a retail CBDC, you can assess all the technologies currently available, and based on that, do the selection. So here, I'll just share a simple architecture where you can implement a CBDC with a Stellar. So here what happens is like you have a central bank and they have an authorization API where various commercial banks connect. So in addition, on the right-hand side, you have various consumers. So whenever consumers want to do a transaction, they can call the commercial bank. Let's say it's from one consumer to another commercial bank, whether they have some sort of an app or like through a card mechanism or like a QR code. So then the commercial bank on behalf of the consumer wallet will call the authorization API. In addition, there will be like CBDC accounts. One is for issuing account where you have the reserves, and also you have the distribution account, which is distributing money to commercial banks. So this is one such implementation. So this is not the implementation. This is just an example forwarded by the Stellar Foundation. So this is just an example how it can be done within a country, but when it comes to CBDCs, it's national currency, and all the time when it comes to a currency, something you have to do is international transfers. So there are various ways where you can do international transfers as well. This is one suggestion to do international transfers. So when it comes to international transfers, again, most of the time it's bank to bank. So for example, if I'm sending a wire to New York or to Singapore, it will be a bank in Sri Lanka wiring it to a bank in Singapore, and there will be intermediary banks in between. So in that case, we use wholesale CBDCs, which I introduced earlier. And most of the time, what happens there is like the two banks will be issuing a smart contract. It's a programmable smart contract. And there will be two ledgers, like for bank A, the currency Y, if that's their currency love. So if, for example, bank A might be a Bank of Ceylon, and they will have a ledger for LKR. Then if you are transferring to America, it will be a Bank of America, the bank B, where you do the cross-border settlement on ledger EZ, ledger for US dollars using the Federal Reserve. So this is just another example how cross-border transactions can happen. So this is a very simple example, but when it comes to actual technical implementations, because CBDCs are completely automated, sometimes this sort of implementation, this simple implementation will be really complex when it comes to actual implementation. So if you go real deeper, I will not go in much detail because of the time. There are things like automated market makers. So when you have to do transactions in automated systems, these market makers will be stepping in to provide liquidity. So for example, if you are transferring USD to Sri Lanka, and then there's a currency conversion to LKR, these automated market makers will handle that currency conversion. So they will make sure that necessary liquidity is maintained in the market, as well as there is enough liquidity, as well as the slippage. Those things will be controlled. So these are like very key simple implementations when it comes to retail CBDCs, which I showed earlier, as well as wholesale CBDC implementation. In this case, I just refer directly to a cross-border settlement. So when it comes to implementing a CBDC, there are several design considerations to make. Some of them are here. So for example, the first design consideration is access. So if you take a country like Singapore, the digital penetration is much higher than a country like India, or even if you take Sri Lanka. So when you are like digitalizing your currency, let's say you are going with the e-Singapore dollar or like e-USD or like e-LKR, then you have to make sure that everyone is accessible to this system. Otherwise, that inclusivity property will not be there. In addition, another consideration when you are going to develop central bank digital currency is the interoperability. So when you are issuing a CBDC, it's not the case where like you switch off one day the existing systems and the next day you switch on the new CBDC. So you have to work along with the cash system, then you have to work along with the SWIFT network and any other local network as well, so that you can interoperate at least the CBDC takes over the complete transaction. In addition, although you issue a CBDC, you will have to talk with international gateways. It might again be the SWIFT network, or it might be other networks with various countries. So then you have to make sure that your currency which is issued will be interoperable with those currencies. There is a third most important one is risk management. So when it comes to risk management, Chakshika just explained what are the disadvantages in CBDC is one of the key considerations is like it's a central point of failure. So when it comes to a currency issuance, we have to be very careful about the risk because you are dealing with a country's financial systems when you are issuing a CBDC. Then the other consideration is programmability. That's the case where like whether you are going to have smart contracts and what sort of features are you going to give. Let's say like I do some lending to Chakshika, and Chakshika promises me to pay it back next month. So this whole transaction can be put in a smart contract where it can be done automatically. So also in the other way around, if Chakshika lends me some money, that interest payment that I'm going to do, I can make a smart contract like every month, pay this amount so that gradually I'll be paying his loan. So that's another concern. So the final concern is the privacy concern. So one thing we should note is that when it comes to blockchains, it's generally public blockchains. And most of the public blockchains, unless it's a blockchain solution which is focusing on privacy, such as Zcash, they usually have the blockchain data public. So all your transactions will be on a public ledger, which is available to everyone. And also, like even if it's not public, certain organizations might be able to see your transactions where you spend the money. So that's another privacy consideration, which will be a big challenge. So to finish off things, let's go and briefly discuss what happened in India. So India has been in the forefront in the region in issuing CBDCs. So as you saw, like what Chakshika presented, around 90 to 95% of the global GDP is countries with around 90 to 95% of the global GDP are now at least testing certain CBDC, and India is one other partner country that joined into the same group. So India has been testing various things, and they released like in stages, and they are currently testing as well. So just as I mentioned, they released a wholesale CBDC. So this will be again for interbank transfers. So they will be selecting around 4 or 5 banks in which are like key banks like the ICICI Bank, Reserve Bank of India, like State Bank of India. These like key banks in India, which will be using like testing actually CBDCs for their interbank transfers. In addition, they also released a CBDC for the retail sector, where they'll be targeting around 14, 15 banks in like again a dozen cities, where they'll be selecting a group of users who can do transactions using their CBDC. So their first target was 50,000, as I remember. Then by the latest, like April 6th, they have reached around 100,000, and they are still also testing in that pilot. So if you take the key challenges when it comes to a CBDC, when you consider the Indian rollout, the key challenges, they have seen 3 key challenges. So as I show in this news article, they have said they have currently only tested with 100,000, and they feel that 1 million is like a goal. But India is a country with over 1 billion population. It's one of the most populous countries in the world. So the key challenges, they have identified 3 of them. So one is the scalability factor. So you might be able to handle 100,000, but how are you going to handle 1 billion people transacting on this CBDC? So that scalability factor is still there. Then related to that is increasing the amount of transactions per second. So when it comes to retail CBDC, as I explained earlier, it might be like a 5 rupee transaction, or it might be a 20 rupee bus transaction, or it might be a 1,000 rupee transaction for a fashion item, or it might be like a 500 rupee transaction for a lunch parcel. All these transactions has to go on this network. In addition, various other transactions, like if you are buying a vehicle, or if you're buying a house, that will be several millions. So all these transactions have to go through this network. So handling that transactions per second is a big challenge. And the biggest challenge they have so far met is the offline transactions. So there might be scenarios where like you don't have online internet connectivity in certain areas, while certain people might not have the smartphone connectivity or like the technical infrastructure that's required. And certain vendors, like if you take a vendor by the road, they might not have the necessary equipment. So how are you going to handle that offline transaction? So what India has said is like they have these three problems, which is the holy trinity of problems for their CBDC rollout, and they are trying to find solutions. So what they have said is like when you are trying to find solutions to two, the third one becomes impossible. So these are challenges that they will be needing to do in future. So just to wrap up the things what I said, I just want to summarize everything. So when it comes to CBDCs, just make sure it's not a cryptocurrency. So as at the start, I mentioned that cryptocurrencies were the focus, where the focus was to remove that central party. So it's a network which will be peer-to-peer, where you are removing the trusted third party. So don't misunderstand it with the cryptocurrency, because this is a case where you are going in the reverse direction back to fiat currencies, where you are again installing a trusted third party, a central bank or a reserve bank, or like a Federal Reserve, to control the currency. So those are like the key things. And when it comes to the future, it will be a game changer for certain countries in the arena of CBDC. For example, if you take a country like China, I have been reading this research article by a European university, blockchain research center of that university. So what they have said is like, when it comes to global trade, China has had a huge bottleneck. That's the reliance on the US dollar. So all the time, if we are going for a trade war, they couldn't go press forward because they are reliant on the US dollar, and because of that, it has restricted. So countries like them having their own currency network, having their own settlement network will be much more beneficial, because they will be less reliant on those bottlenecks that they are facing. So for countries like Sri Lanka, when global major players are like trying out these currencies, countries like our neighbor India is trying out these countries like China looking into it, countries like US looking into it, who are our biggest trade partners, we also have to at least do some pilots and get ourselves ready, unless we'll be too late into jumping into this bandwagon. So that's it from my side. I leave it up to Chakshika to continue.
Thanks, Akumal. And I think we have covered a lot about CBDC. One of the fact that I couldn't touch is the operationalization aspect of CBDC. So that means for any country, it is not practically viable to move into completely CBDC platform overnight. So probably any country will have to have two systems in parallel. That means a fiat system and a CBDC system. So it's a kind of an implementation choice, as Dr. Sakumal explained, whether to have two systems separately or combining them all together in the outer layer, but underneath they have to have a separate log where this part is digital issued, this part is fiat issued. So in other words, for example, say in my electronic banking account, now I have 100,000 rupees. So as I explained you before, so that is originally issued as fiat currency. So that is not CBDC. So for example, say tomorrow or next week, Sri Lanka will go a pilot run of CBDC, and I'm getting my salary, another say 50,000 as CBDCs into my bank wallet. Now I have two parts in my wallet. So initially I had 100,000 fiat currency in my digital banking account, and now I have another 50,000 rupees that is digitally issued. Now here is the challenge. So it will be a implementation challenge where for me to show it as a combined figure like 150,000, 150,000, or I don't know. It is up to the regulators to decide, and maybe those two money wallets can be displayed differently. But for example, now I want to withdraw 150,000 from an ATM. think of a scenario like that. Now that I had 50,000 in my wallet as a digital currency, now I'm going to make a ATM withdrawal 150,000. So what the system has to do now, they need to convert digitally issued 50,000 CBDCs to fiat. So there should be a conversion. So for that, there's a concept called mincing and burning. So mincing means creation of CBDCs, and burning is cancellation of CBDCs. So now, since the bank need to convert the 50,000 CBDCs I had in my wallet into fiat money, so there should be a kind of a creation, mincing process. So it is not required to bother, I would say, the central bank at every time that these mincing and burning happening. So instead, a particular bank can keep a log on this much of money I have been converted to fiat, digital to fiat, this much of transactions, volumes I have converted fiat to digital. So that log a particular private bank can have. And then maybe at the end of the day, they can do a net settlement of either net mincing, net amount mincing, or net amount burning. So I would say this can be either done at the end of the day, or maybe they can keep it as a log for some time, and then if there are any excess or whatever, then only they can bother the central bank and get it exchanged. So all those are design choices. As Dr. Sapumal mentioned, there's no particular standard one of the important thing to keep in your mind. So that is, there's no particular standard about the CBDC. Some of the major concepts are same, but the way that CBDC is implemented in a particular country can be country specific. So different countries might have different requirement. For example, country like Sri Lanka, probably we need to address inclusivity. Probably in our country, the digital adoption is not up to the extent of maybe Singapore or US. So considering those facts, a bank or the financial regulating authority can decide these minor facts and then the major minor facts and major facts of the architecture. So that is one of the main important fact about CBDC. I think Sapumal, anything else to talk about or add? I think the time is now the session time is about to end. So if you have anything to add, Dr. Sapumal, you can.
I think we can go to one or two questions. There's one question. Yes. Maybe I'll answer that question. So who decides the exchange rate for CBDCs for cross-border transactions? So there can be it can be done in two ways. So as mentioned, CBDCs are like controlled by central banks. So they are the governing authority. So just like today, they can do the exchange rate derivation through the central bank involvement, like based on say the supply and demand, or if there's some certain control that is being put in, that also can be done. So if you want to go to a complete automated system, then you can use things like automated market makers, where like based on the actual demand and supply, just like a decentralized exchange operates, just like a stock market operates, the exchange rate will be decided. So something to add, as various countries, like over 100 countries, have like tested their own CBDCs or like piloted their own CBDCs or even rolled out. Certain countries are working together where they are trying their own cross-border settlement mechanism as well. Like for example, Singapore and Malaysia, then Singapore and various other countries. Like certain countries, they have created groups where they are testing interoperability of their CBDCs, so that they can do the cross-border transfer, and doing that, they will be also deciding the exchange rate for the CBDC. So there's two ways, just to summarize. It can be done fixed manually based on design choice by the central bank, or like if you are going completely automated, you can leave it up to the supply and demand to make the decision. Yeah, that's it from my side.
Okay, let's open up for the question. You all can unmute and ask your question. Any questions? You all can type in the chat box, so you can unmute and ask your question. Okay, I have a question to Engineer Chakshika. Now, we were talking about this mincing and burning to convert the CBDC to fiat cash in. So in that sense, any commercial bank should have the fiat currency equivalent to digital currency, no? Otherwise, the system won't work, isn't it?
No, nothing as such. As I told you, that is based on the way that the system has been designed. So either they can have a log that I have created this much of additional money, digital money, or other way around. So based on that, they can seek a settlement from the central bank. It is not necessary to have the equal amount of CBDCs and fiat in a particular reserve.
From a commercial bank, no? If in case
Correct.
in the case of
Correct.
case of all the customers wanted to convert their digital currency to
correct. Say in a commercial bank at a given instance, say now 100% is fiat. Now on the next day, so all maybe 95% customers will prefer to transfer their money into digital CBDC. So in that case, it is not required to have an equal amount of digitally issued CBDCs in their reserves, but technically they can seek central bank support to get that exchanged.
Oh, okay. So presently, in our central bank, have initiated any activities on this, or are they planning on any pilot projects?
Yes, actually, I tried to reach a couple of sources and got kind of a high-level information that they say they have already done some research, and there are a team who has done research about this, and there were a couple of internal arguments and papers going on. And maybe after, maybe in the near future, they will take a call. I think I'm not sure whether this is a high time for Sri Lanka to think about, in my personal opinion, to think about digital currency because of the investment, or sometimes it can be. But because if you do your own research about Nigeria's implementation, even Nigeria has gone into CBDC. So they have implemented CBDC as a remedy for recession. So to address the lack of supply of physical money, to address that kind of recession matters, they have implemented CBDC at a recession time. So I'm not a kind of a economic expert to comment on that into that deep level, but maybe the central bank will soon take a call when we will be, at least start a pilot project on this. So as of date, nothing is in pilot.
Thank you, Engineer Chakshika. Any other questions?
I'm Subhash. So I have a question now. Chakshika, now the technology underlying the CBDC is a blockchain, isn't it?
Mostly blockchain. Dr. Sapumal, is there any other technologies
That's my next
that you
question.
know? Any other?
So generally it's blockchain, otherwise it will become like any other e-money, like just like the examples Chakshika showed in the slides. So generally when it comes to CBDCs, it's generally derived from cryptocurrency. So it will be the core technology behind will be always the blockchain.
Yeah, thank you.
I am Rohana. Dr. Sapumal, cryptocurrency was supposed to be used for financial transactions, but currently it is not happening. People mainly use cryptocurrency for buying and selling the cryptocurrency itself. So do you think that it will happen to the CDBCs as well?
I do accept, like, for a certain part of your statement, like, and I do have reservations as well, like cryptocurrencies, it was mainly targeted at transactions. So for example, when Bitcoin came in, it's a store of value. Then when it comes to Ethereum, it was programmable money. So there are lots of transactions happening, like the transactions value is there. Of course, the popularity of these cryptocurrencies came with the speculation nature, where like you buy it low, then the prices go exponentially high. So that speculation nature and certain ups and downs in global markets have led the values going up. So I don't think CBDCs will have the same thing, because let's take LKR, whether it's a 5 rupee coin, or let's say like 100 rupee note, and 100 tokens of LKR CBDC, it's still the same value. So there will be no scenario where like CBDC LKR tokens or CBDC LKR will be much higher value than the cash equivalent. So there won't be any speculative nature opportunities available. So I'll just give you like one exception that happened. This is again not a CBDC, it's again on stable coins, where like if you take USDT, which is the tether equivalent of USD, and USDC, another stable coin for USD, where they had minor, even now if you check the markets, there are like minor differences in prices. So that's very minimal, and most of the time if the markets are like very mature and there's lots of liquidity, all these minor changes will be immediately coming to on par. So there won't be any like speculative opportunities with CBDCs, because any CBDC will be equivalent to the existing currency. So it's not another derived version, it will be the same representation. I hope I answered the question.
Yeah, okay, thank you.
Yeah. In my opinion, that won't happen. I mean, the speculation won't happen, because since the value is controlled and governed by the central bank, so it will be 100% equal to fiat currency value. So it is not something that is controlled by a public, public ledgers, and that can be manipulated.
Okay. Any other questions? We have 4 minutes to go. Any questions? So let's hope to launch the digital currency as soon as possible. And so, Dr. Sukumar, now this when you take India, I can see that even for in a tea shop, they do the digital transaction for 40 rupees, Indian rupees, or 30 rupees, and they have approved for the Google Pay also. So in terms of Sri Lankan context, what your thought on that?
So like Google Pay, or like if you're using PayPal or like any other local solution like that, there's several like wallets that's already available in the market. I'm not sure exact names, but I think Chakshika can tell those names as well. So they are like a version of digital representation of the currency. Like you either top it up, or like when you make the transaction, it will be charging on top on your credit card or debit card. But here the core difference is that you are directly trading with or you are directly working with the currency itself. So that's the core difference. So when it comes to India, as I mentioned, it's not a whole scale implementation. It's still at the pilot stages, like 100,000 people doing transactions. So it might not be like the smallest transactions. It might be certain limited transactions just to get the experience, where like from 100,000 to 1 billion people, it's a long way to go. So before going that, it's just to get that experience. So when you are going there, you will definitely have the 40 rupee transactions. Also, you will have the million rupee transactions as well.
Thank you, Doctor. Any other question before we wind up?
And to add something to Engineer Mustali's question, so I think in my eye, the adoption of the public will have no relevance to this CBDC, because, for example, even at this moment, the digital payment adoption is very low in Sri Lanka compared to other countries. So I don't mind. I mean, even at this moment, I can make a digital transaction using my card. So it doesn't matter that I have a lot of fiat currency in my bank account or a lot of CBDCs in my bank account. So only for the settlement that matters. So as a end user, I pay some money to a supermarket and buy something. So that is real time happening. So I transfer some money to one of my friends and he receive money on real time basis. But still, people are not using these, Lanka QR transaction or digital SEFT or whatever. So the adoption is very low. But if there's a particular advantage that a particular party can get by using CBDCs, for example, I have heard that in England, maybe to promote CBDCs, they are giving some bonus money. I heard that to a wallet. Whenever they do a CBDC transaction, they get some bonus money into their wallet. So that is one of the approach. The other one is, for example, say as we spoke, since this will have any positive impact on cross-border transaction as it is get settled real-time basis, maybe importers, exporters, they will start using CBDCs over fiat currency because they have a benefit. But for others, the general public users, bottom of the pyramid, I think whether the source is CBDC or normal e-money in fiat money in e-format, that won't make any change for their adoption. It's a kind of a habitual change.
Yeah. Thank you, Engineer Chakshika. So let's wind up. Our secretary is not well today, so I'll be delivering the vote of thanks. So very good evening to everyone. It's with a great pleasure that I'm delivering the vote of thanks. Firstly, on behalf of IT and Computer Engineering Sectional Committee, we wish to express our sincere gratitude to IESL President, Secretary, Council, and the staff. So our special thanks to Dr. Sapumal and Engineer Chakshika, who has given their precious time to conduct this event online, and we are thankful to them for sharing their immense knowledge on digital currency technologies with our engineering community. Once again, many thanks to enable this evening to have a successful event. Also, I would like to thank our organizing team of IT and Computer Engineering Section Committee for helping us to arrange this public lecture. We are organizing these kind of events, to uplift the IESL in all aspects and to uplift our engineering community knowledge. So finally, I extend my big thanks to all of the participants who make this event successful. So thank you. Have a pleasant day. Thank you very much.
Thank you very much, all of you, for participating. Have a pleasant evening.
Thank you.
Thank you all.